Hey guys, I just want to weigh in on what's probably going to be a bad Monday for most investors. I'm staying pat. I'm going to weather the storm. I like my investments. I think my investments will do well over time. Um, of course, I'm talking my Roth IRA. Um, if you're a day trader, short-term trader, if you need the money tomorrow, next week, next month, I would say short the hell out of the market. And specifically, I'd go after the NASDAQ. Why the NASDAQ? Because most of the companies on the NASDAQ aren't even profitable. But I said pay attention to Monday, but more importantly, pay attention to what's going on in the Asian markets because they're ahead of us. And a lot of people are panicking. I mean, the markets fell Friday more than 9/11. It was about a 6% drop, and then if you add Thursday on top of it, it was about a 9% drop, I believe. And I think the markets fell 2,000 points Friday. Anytime the markets go down more than 1,000 points, that's a big move. So everybody is panicking. Everybody is selling. Like I said, if you're a long-term investor, I wouldn't really worry too much. I'd just what I used to do was anytime the markets fell 1,000 points or more, if I had the extra cash, I'd stick an extra $1,000 in. You know, it fell 2,000, I'd stick 2,000 extra in. That kind of thing. But this could be a rough week for us guys, not only in the U.S. but around the world until we get some stability as far as interest rates go, as far as unemployment goes, as far as credit numbers. What I'm seeing is the savings rate is actually negative, whereas the U.S. used to be around 8%. And the credit card interest is so high that some people are even paying 30-some% interest just to pay their bills. And of course, that's not sustainable. A lot of people think we're going to have massive inflation. I think they're wrong. I think we're actually going to have deflation. I think Lacey Hunt, who is probably the best economist alive today as far as the U.S. markets go, and almost everybody in the mainstream will disagree with him. And he's provided data point after data point, statistic after statistic, and yet a lot of people just discount them. But I want to play this clip real quick just to hear the panic in her voice. She sounds panicked to me. And if you know, in China, most of the Chinese a lot of them don't really invest in the real estate. I mean, the stock market. A lot of them invest in real estate, and a lot of their real estate investments are almost worthless. They have built cities that no one lives in, and housing for 3 million people when the population of the city is 100,000. There's no new jobs coming in, and they just have just empty apartments where no one lives, or unfinished, or it was a Ponzi scheme basically where they were taking money for the 5th apartment complex and they didn't even complete the first one. But just listen to her voice.
Panic, bloodbath doesn't even begin to cut it. And you look at the declines on the Regents benchmark, worst since 2008. It is across all asset classes. We're seeing the reeling from this ramped up tariff war, and it is also across geographies, across sectors. When you're looking at stocks, really interesting as well. The likes of the Singapore benchmark, normally seen as very stable, plunging by the most on record. That tells you a lot. The difference this time around for traders that are looking for a reference, is this as bad as GFC or March 2020? Is that if you're comparing this to the early days of the pandemic, Powell doesn't seem like he's willing or very eager to kind of swoop in with support. And for China, that's back from an extended weekend, it just shows you how they are also part of the tariff pain, because there was speculation that the optimism of Chinese support measures would mean that the declines were not as bad today. But look at the Hang Seng, almost 11% down, the worst decline since the GFC. We're looking at a
See, they're really worried about housing. Why? Because most of their money is invested in housing. Now, if you take a look at this investing.com /economic calendar, it basically will show you, and you can just sort this just by U.S. I believe if you want, but small business optimism. I don't know if there's any major things today. Crude oil. But I know this week there are some major things happening. I don't know why all these are checked. I don't even know if I've ever been on this. I think I've been on this website before, but I don't remember checking all these things. Alright, so this will tell you all the U.S. Stuff going on. Thirty-year mortgage rate, mortgage applications, mortgage refinance, crude oil inventories. This stuff right here has to do with like inflation stuff, I believe. So those are going to be Thursday. So that might be something to watch. And I don't necessarily know what all these numbers mean. Consumer Price Index is CPI, and Producer Price Index. This Michigan inflation expectation is probably going to be key on Friday. But yeah, Monday, the unemployment trends. Unemployment is going up, which is not a good thing. The only thing that's not going down is gold. And of course, a lot of bonds are indirectly correlated to stocks. So usually when stocks go down, bonds go up. But if you're really ballsy tomorrow, I would suggest doing the inverse of QQQ. They got ETFs that are 1x short, 2x short, and 3x short. And I think those are probably the best bet if you're a day trader. I think Monday and Tuesday are probably going to be bloodbaths. Monday's probably going to be the worst of it. And then they're probably going to have some good news later in the week to bring some stability around. That's my guess. Anyway, thanks for watching.